In our last example, we want to look at calculating a person's actual income tax using, in this case, a tax table from 2022. Again, these values update every year, so for 2023, this information would already be out of date. But we know that a person has a taxable income, so after credits and everything else have been deducted, a taxable income of $150,000, and we have this tax table. First thing we want to do is identify where our value falls. So in this case, $150,000 falls in tax bracket 4. If our tax code was really simple, already it's complicated just calculating the taxable income, but if it was simple from here, you would just pay 24% of your $150,000 as your taxes for the year. But that also wouldn't be very beneficial to us, the people who are paying those taxes. So instead what we have is a progressive system where we look at paying 10% tax on the first $10,275 that you earn. So we'll start off by looking at tax bracket 1. What we do is take the difference between the upper amount and the lower amount of the previous category. In this case, that's 0. So for the first $10,275, you get taxed at 10%. So that means you would owe $1,027.50. Then we move up to tax bracket 2. That upper limit is $41,775. We subtract out the upper limit from the previous bracket. So we'll subtract out $10,275, which leaves us with $31,500. So your first $10,275 were taxed at 10%. Your next $31,500 are taxed at 12%, meaning we owe $3,780. Then we move to tax bracket 3, where we again take that difference. In this case, $89,075 minus the upper limit of the previous bracket, $41,775, to get $47,300. So the next $47,300 that you made is taxed at 22%. So we owe $10,406. Then we move down to the fourth bracket, which is where our salary in this situation actually falls. So what we'll do, instead of going all the way up to that $170,050, is just take our value of $150,000 and subtract out the upper limit of that previous bracket, which was $89,075, giving us a total of $60,925. Again, what we're saying is we earned $10,275 in that first bracket, $31,500 in the second bracket, $47,300 in the third bracket. That was the total amount in each of those brackets. But now in bracket 4, we only earned $60,925. The amount that we earned in this fourth bracket gets taxed at 24%, or $14,622. Now what we do is take each of those individual amounts and add those up to give us a grand total of $29,835.50 that this person owes in taxes. That is quite a bit of money, but again, just for reference, this is different than having your entire salary of $150,000 taxed at 24%. If we did that, then our tax bill would come out to $36,000. So this progressive system, which taxes us at lower amounts for those earlier brackets, results in us paying less money in taxes each year. And I believe I misspoke earlier. So this is the total amount owed. And then from this, tax credits could be deducted to bring that total down.